So we'll come over, have a look at the Nasdaq, and let's have a look. So in the likes of the chat group and stuff, people have been posting trades of what they're looking at and where they're looking to trade and so on and so forth. Now, the problem is that we've had a pretty big sell-off on this now. So we have had down into this area. So we've had a touch, bounce, touch, bounce, touch, bounce. Now, is this the bottom of this sell-off? See this sell-off here? So if we have a look at this, we can measure this as we've had a sell-off of now, that is 5.7%. It's a 5% sell-off. I hear people all the time talking about market crashes and so on and so forth. This is a sell-off of 5%. So is this the end of the sell-off? Is this the end of that? So we've now had a green day today so far. So is this where we think that this would be, is this the place to buy? Is that a yes or no for you guys? Well done, Adnan. Well done. Okay, so what we have going on here is this. Actually, I guess the arrows is probably easier for me. So we have phase one, phase two, phase one, phase two, phase one, phase two, phase one, phase two. Now, just to give the new people here a little understanding, is that from here to here has dropped 5%. That is just a phase two. If it drops 10%, which will be somewhere around there, that is still called a phase two. If it drops 20%, which will be somewhere around here, that is called a correction. If it drops 30%, which would be down here somewhere, that is called a market crash. So you have to understand what you're listening to. If you listen to the likes of Bloomberg, I don't know how many people here listen to Bloomberg, but if you listen to Bloomberg, they're talking about a market crash, a crash, a crash, a crash, a crash. Okay, that's all you hear. Scaremongering is the same as with the coronavirus, run like that. Scaremongering, crash, 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 crash. Everything's a crash. But this is a correction at the moment. If it comes down to this level, where then this, bear in mind, this is where I wanted to come to here. This is still a phase two. It's just the market doing exactly what it's supposed to do. Because if we look at this, look at that high. Look at this high, it's got higher. This high has got higher. This high has got higher. And at the present moment, this high is still higher. So it means that the market is still going in an upward direction. It still has momentum to the upside. Now, the original question is this a good place to buy? It depends on what you expect to happen next. If you're someone who's saying, like Adnan said there, that a 10% drop is a correction, 10% is not classed as a correction. It's a pullback of phase two. But if, for me as a trader, this is a level. This is definitely an area. There is definitely a level there for us to trade. 100%. There's definitely an area there for us to trade right there. Now, I would love it to come back to here. And that would be the area that I would be looking to trade, would be taken off this bounce. And the bar might even come down and touch this level. And I'll be looking off that. So this would be the area I'm looking to trade. Now, this one here, it's a soft level. So we have soft and we have hard levels. This one would be a soft level. And because it has bounced once, twice, 3 times, it is an absolute valid trade. But out of the 2 scenarios, this one or this one here, which one do you think has the highest probability? This one is A and this one is B. Do you think A is a higher probability of going up or B? I don't know. Marcus, well, absolutely. That's the $64 million question, isn't that? It's actually 50-50. Okay, it's very 50-50 in the chat group here. So, and that's pretty good. Now, as a trader, we have to live and die by our trade calls. So we have to live and die by our trade calls. So we get trades right, we get trades wrong. But there is a trade there. Absolutely, there's a valid trade right there. Now, the problem is that there's not one at this present moment in time. See today's bar. I need today's bar to finish. I need today's bar to finish. So for me, I have to wait for this to finish. Now that bar could finish up here, or it could finish down here. I don't know, or it could finish either way. So I'm not looking at this till today's bar is finished. Now, why has this bar moved? Okay, so the Nasdaq, which is a US stock market. So the US stock market doesn't open up for an hour and 20 minutes, give or take a few. So why is this bar green? Why is this bar moving? Can anyone tell me why this bar is moving? If the market is not open, if the US stock market is not open, why is this bar moving? Pre-market? Nope, it's not the pre-market. It's called the futures market. It's called the futures market, okay? So the futures market is where traders will say, speculate on what's going to happen when the market opens. So we're anticipating, so today's speculators of futures market are anticipating that when the market opens, it's actually going to be a bullish day. They're expecting the buyers to take off. So what they're doing is they're jumping into the market nice and early before the market moves, and then expecting the day to be bullish. That's what the futures market is. So it's the same as trading on the likes of the foreign exchange. It's you're taking a bet, you're taking a gamble on a particular market and which way it's going to go. And if you have a stop loss below, if you're tracing this long, remember your stop loss has to be below there. So just imagine this bar finished as is, okay? This is not a trade I'm taking at the minute. This bar has to finish for me to take that. But my entry would be above that bar. And my stop loss would be below this one. I've left it a little bit below at the bottom because I need to pull it up a fraction. So there. So look, see my stop loss. My stop loss is below that level there. Which means then, if I'm correct, I'm now getting triggered in on the way up. But if I'm not correct, if my trade is wrong, and this turns around, the wrong arrow. If this turns around and then goes down, I haven't been triggered in. It's cost me no money whatsoever. And that's the idea. And that's the idea of pending orders. Now, what some people will do is they will take that as a limit order. So what they will do is they will put an entry there. And put their stop loss below this low, which is also perfectly valid. That's a limit order, which means price has to come down, go below your entry, hit the level, and then bounce, which is much harder to do. Because where do you put your stop loss? Where does it go? And the idea would be is you would put your stop loss a little bit below this low here. Remember, the idea is when we're trading these, we keep them in the correct places. Now, the Nasdaq is a CFD. So this is a CFD trade. So this means you have to trade it with leverage. So if we're pressing the buy button here, look, leverage, we have to use leverage. Even with X1, it's still a CFD trade. Still a CFD trade. So it still means that we're using leverage. If you want to jump in this and you see this pullback and you see this as a way to potentially buy it, only you want to buy the underlying asset, you want to buy the thing itself, you can trade the ETF. So it's an exchange traded fund, and one for the Nasdaq is QQQ. Now there's loads of them. There's loads of them, but QQQ. Now if we go to the chart here, it's pretty similar to the Nasdaq. Okay, so that'd be one that we're potentially looking at. Now, if I get that there, pop that in. So we've had a bounce there, and it's come down and touch it again. Now, something changed with ETFs this year is that even though we are trading it as a CFD, if I press the buy button here, it is X1. We can trade X2, it is X1. It is a CFD. Even if we're trading as X1, it's still a CFD, but there is no cost to it. So eToro is giving it as an underlying asset. So there's no cost to this. So it means then if we're trading X1, it's the same as you buying the underlying asset. Yes, it is a CFD. And the only way you can get stopped out, just say we put 100 quid in here, the only way we could get stopped out is if the QQQ went the whole way to zero if we're trading with X1. If we're trading with X2, the only way we could get stopped out if this dropped by 50%. Okay, and that's the difference when you're trading the likes of this. So it means for you to double your money, where at the minute it's at 360 quid, it has to go to 720 for you to double your money, which is a long way for that to go. So it has to go up to somewhere around here for you to hit double your money. And that's the difference when trading a CFD and trading the underlying asset. So we've gone through the Nasdaq already. Has anyone got any questions on the NAS before we drop over to the S&P or before we go to the likes of the Dow either? Anyone got any questions on the QQQ, the exchange traded fund, the Nasdaq, any of those before we crack on? Because it is a really good time at the minute. And why is this a really, really good time to be in the market? Why is this a really, really good time to be in the market? Because everything is going down, can go shopping, cheaper prices, lots of opportunity at discounts. Stocks are discounted rate, getting stocks cheaper, discounted. Okay, well done. Everyone seems to Santa is coming. Stuart, we're a little bit early for Santa, but bear the saying that is some of the actual shops here in London have Christmas stuff out already. Can I take the Nasdaq now? But Felix, it comes down to whether you're expecting this is the bottom. If you think this is the bottom, there is a trade absolutely right there, yes. But for me, this bar is not finished. It hasn't even started yet. This bar hasn't even started yet. The market is not opened. So is there a trade there? Yes, there is. But for me, is it a high probability trade? Is it something I would take? And the answer to that is no, it's not something I would take. I would much rather wait and let it confirm and then jump in on the 4 hour. Because remember, this is a trending market. Once it starts trending, we generally get a trend after the September pullback. We generally get a trend till about January or February. So it means then that if we get into this, I am looking for this long term. Okay, if we look at historically, okay, let's have a look at last year. Look, there's the pullback there. And then look what happened. Motored on all the way up to here. Yes, we had pullbacks, but if you would have put your stop loss here and held on to that trade, we'll just get the measuring tool here and go from here down to the bottom. which is 5%, just say 6%. At the price right now today, it is at 35%, just under a 6-to-1. If you'd have held on to that. Yes, you would have had rolling fees. Yes, you would have other stuff, all that. But the idea would be is then you scale into it on these positions as it keeps coming back. So the idea is that we look for these areas and then we get an opportunity from them. So there's the pullback, last one. And then look, there's the pullback in February. Takes off again, pull back. And then hopefully the next one, if it follows the same pattern, which remember, as people, we love patterns, that we're expecting this now to run till potentially January, mid-January, February. Okay, so that's the idea with trading the likes of this. So let's have a look. So there is a potential trade there now. If you're someone who's aggressive, if you're someone who's expecting this to run, there is a trade there at the moment. So let's have a look at the S&P before we take a trade on the Nasdaq, because remember, the S&P, the Dow, and the Nasdaq are almost identical. They're almost identical. Okay, so make sure we are looking at all three of them before we make a decision. So if we look at the chart here now at the minute, we can see now we had a trend line there, we had an entry there, stop loss here, and it never triggered us in. So this is a trade that I took myself. It never triggered us in, and now look, it came down. So we're going to delete this. And the problem here is that we don't necessarily have a horizontal level on this one. We have the low here. And the low here and coincides with the open and close of that body. And then we have the wick at the bottom. Now, for me, I would much rather see that come down to here again. I'd much rather see that come the whole way down to this level down here. I'd much rather see that come to there than turn around at the moment. So it depends on whether we are confident that this is the level or not. Now, for me, this is a much stronger level. So there's one touch there, two touches. And if it comes down to here, I will be taking this trade long. But this particular one, no. Again, this market hasn't opened yet. The market doesn't open for an hour and 10 minutes. Okay, so there's no opening here at the moment. So is there a trade there? Again, same as the Nasdaq. Absolutely there is, but I wouldn't be jumping in it live. My entry would be above that bar. I'll make that line solid. My entry would be above that bar and my stop loss will be there. So stop loss there, entry here, and I'll be looking for this to break the upside. Now, if you were someone who was wanting to jump in now, but be really conservative, your stop loss would go below that low there. That's where your stop loss will go. But then the risk to reward is not there, because remember, you need to go this distance to hit a 1-to-1. So if I drag that up, and there's your 1-to-1 target. So if you risk, just say you risk £1,000 here, by the time it hits here, it's £1,000. So your risk to reward is nowhere near as good, but it's still much better than jumping in the underlying asset. How would you use Fibonacci on this? Okay, so Fibonacci is one of those tools that you can use in a couple of different ways. So I'm going to delete these here so we get to see them. Now, Fibonacci, as a general rule, why are you not drawing? There we are. So Fibonacci is a general rule. So there is phase 1, and then this is phase 2. Now, what Fibonacci will do is it will work out what is the actual area of that coming back. So all it does is it measures. Okay, so it measures starting here. So this is 100%, and then this is 0. So all it does is it measures the phase 1. So see this phase 1, it measures this phase 1 and tells you, it calculates what percentage this has come back. Now, the 38.1 is there. Then you have sort of 50% is there. Then you have the 61.8, which is there. And then another one is a 786. So there are the levels that generally use in a Fibonacci. So the ideal scenario would be is the 50% or the 61.8. They're the two ideal levels. But if you look at this one, so there's the phase one and there's the phase two. So if I put a Fibonacci on this, so there's 100%, or there's 100 and there's 0. Look, this one has gone below that, hasn't it? So then are you taking Fibonacci from here? So is this the beginning of this overall phase one? From there to there? Well, if that's the story, then it's a completely different one. Okay, so that's the problem with Fibonacci. It's very subjective. It's where you're looking to draw it. But for me, it's always drawn on the last cycle, which means then to see this one, that there means that this has broken that low. Now, if you're looking at this overall phase one and you're trying to work out where this correction is going to come back to, that's how you would use this. So that's phase one and that's the phase two. So that whole Fibonacci would be measuring this one. And then this here is the Fibonacci measuring this. I'm going to clear all those drawings. I'm going to get the fib and I'm going to show you. Whoop. So if I go here to Fibonacci, so we start at the bottom of this, start at the bottom of the phase one. Move that out of the way. So we start at the bottom of the phase one and you just drag it up to the top. And look, there's 100%. And then there is 0%. Look, there's a 38.2, 50%, 61.8, and then down here is a 786. Now, the problem is that the 786 and also the 50%, they're actually not Fibonacci levels. They're levels that people have put in over time, and they're levels that it seems to be respected. So we can see here that it has broken through it, but the candle has rejected this, and you could call this a double bottom. Now, if we're going to the overall, the bigger momentum, so we have here, this is the bottom, there's 100%. This is the top. We can see now that this has come back 50%. So all the Fibonacci is doing is measuring this here. So it's saying from here to here is 100%. What has this reversed? And you can say this has come back and touched the 58%. You could say that this is now sitting on the 38.2. So you have the problem with all these tools. They're all subjective. It's all how you read it. Okay, so Fibonacci can be used on the bigger cycle or it can be used on a smaller cycle. And what we're using here, this is the weekly phase one and this is the weekly phase two. So if I go up here to the weekly chart, we can see here, there's the weekly phase two, there's the weekly phase one, and then the weekly phase two. Because that's basically what we're doing. We're trying to figure out when is that weekly phase two going to finish. So there's the weekly phase one, phase two, smaller phase one, phase two, phase one, phase two, phase one, phase two. And that's all we're trying to work out. When is the weekly phase two finishing? Is it going to come back down 100%? Is it going to bounce off the 50, 61.8? So that's theoretically what we're doing. We're trying to work out when the weekly phase two is finished. But trying to let people know and understand that is a little bit harder. So Fibonacci takes a little bit of getting used to. But remember, we have had a horizontal level here and the Fibonacci came to it. So 9 times out of 10, we already see these levels by putting in the horizontals. So it's a tool that adds. It adds to what you're looking at. Henry, do you use Elliott Wave? So I don't use Elliott Wave because Elliott Wave is a theory, okay, and it has 5 cycles, and then it drops, and then it has you start the whole thing over again. But the problem is that there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 waves here before it's broken. Okay, so it's a theory. It's like anything else. So I'd rather than just following a set type of rules, I would follow the likes of the market structure and just follow the market structure rather than going, well, look, it's done 5 times, it's now overextended. It may be, but at the present moment, it's not. Okay, at the present moment, it's not. It's continuing. So, are we expecting a pullback? Yes, absolutely. Of course, we are. We're expecting a pullback. We're expecting this phase two, and if we get a phase two, then we can actually trade this, and that's the idea. We're looking for that to we're looking to jump in on board. We're looking to get started on it. So the idea is to let the structure let you know, and looking at this, there is potentially more downside in this. This for me is a stronger level, but there is a trade there. Now, if you're someone who has to trade here, for me, it would be the ETF. So this is a CFD. So this is you have to trade it with leverage. Whereas if you want to trade this as an ETF, the SPY. Okay, so the SPY, so the S&P 500 is the SPY, the same as QQQ, and this is the largest traded fund in the world. Okay, there is no fund that has more money that's traded than the SPY 500. And why is there so money in the SPY 500? Can anyone tell me why the SPY is the largest traded fund in the world? Anyone hazard a guess why it is so big? It tracks 500 companies. No, well, I don't mean big as in the amount of companies in it. I mean the amount of money that's in it, the amount of money that is traded in this fund. So the ETF. It has the biggest companies. No, well, you have the Russell 2000 has more companies than the S&P 500. It's not a CFD. No, again, that is not the reason why. Why is it? Because it's most popular. But again, there has to be a defining reason why something has gone really popular. Why has it gone really popular? Tech companies. Has to do with value investing? Nope, not to do with value investing. Best results year on year. Well done, Wayne. Best results year on year. So just imagine you are a trader, okay? Not that you actually are. Just imagine you're a trader and you lose money 1 year. You are down money the next year, you're up money. So the idea is that every trading company in the world is benchmark is to beat the SP 500. Okay, so the S&P 500 over the last 40 years has done an average 10.2% return year on year. So the idea is that if you are not able to return more than 10% a year, would it not make sense just to put your money into an SPY fund and just leave it alone? Wouldn't that make sense? So how many people out there trade and haven't been profitable year on year? Have been a little bit down, have been sideways, haven't made 1 or 2%. Last year lost 1 or 2%, so on and so forth. Now, some years the S&P will be down, some years it'll be up. So, but some people manage to mess up investing in the SPY as well, the S&P. So the idea is that you are supposed to leave your money there year on year. So the likes of this is if you leave it for 10 years, you should double your money. But the problem is people put their money in. People put their money in here. So if you put your money in here and now you've had a drop of 5% and everyone's talking about a crash, what do you do now? Most people will probably jump out of that. If you're a new investor, you'd probably jump out. You would close a trade. You would abandon ship. Okay, and that's the problem. People like to abandon ship, and that's not something we should be doing. We should be holding on to this. So the idea is hold on for 10 years, it doubles your money. But the idea is to keep buying it on a monthly basis. So a little stat there that was that I heard. So if you put £5,000 into a trading account and put it in the SPY fund for a family member, for your daughter when it was born, or your son, or your cousin, niece, or nephew, put £5,000 into a trading account. By the time they're retired at 55 years of age, they would have £1 million in their trading account. And that's assuming the S&P does exactly what it's done for the last 40 years, returning 10% a year. So it's not hard to become a millionaire. It's not hard at all. All we have to do is slow gains plus the likes of time. When you add slow gains and time, it's very simple to do. But the idea is people try to fast track this. People want to get rich tomorrow. People want to. How many people were looking at this going, Henry, 55 years to make £1 million? I can do that in 3 or 4 years in crypto. Well, you can if you get it right. The same person who's laughing at this is doing that is actually down on the crypto portfolio. I've just invested £5,000 now. Wade, what age are you going to be in 55 years? Can someone lend me £5,000? 101. Look, when you get a letter from the Queen, you then have to wait 1 more year, and then you can cash it in. Okay. So that's that. So that's the idea. So remember, and then the last one then is the Dow. So for me, this has to come back down to here for me to trade it. I'm looking for the S&P, I'm looking for the SPY to come down to here. And then this for me is the area we can actually have a look at. What's your opinion on bots? I have no idea what you mean by bots. Do you mean bots on Instagram? Yeah, so that is called dollar cost averaging, Francisco. So that's the idea. That's what you should do. Whether it's 50 quid, whether it's 500 quid a month, whether it's whatever it is, just a direct debit every single month, put it into your trading account the minute you get paid, and do that every single time. Do you mean algo trading? So, and the Dow Jones, DJ. Yuan, do you mean algo trading, whereas you have a bot that actually trades for you? Like a quant? And the last one is the Dow. Okay, so the problem with bots is a bot is only as good as the person who has built them. So Yuan, if you're a good trader and you make money consistently, your bot will probably make money consistently. Secondly, generally when people are trading bots, they do it on a specific currency or a specific asset or a specific stock. Now, the problem with that then is the market changes all the time. Market changes all the time over years. And your bot may be running a year or two and actually make really good money, but the next 5 or 10 years, it could be negative. So you have to be able to tweak them. And that's the problem with buying algorithms and buying bots and stuff. 99% of them are absolutely crap. 99% of them are crap. It's the same as most traders. 99% of traders are crap. And then it's hard to find the good ones. And when you do find the good ones, you need to hold on to them for dear life. Okay? Get to know them, become their best friend, give them value so they actually want to know you as well. So how do you trade the SPY, Felix? Because the SPY is the underlying asset, just press the buy button on it. Whenever you are happy with the level, make sure you're risking 1% of your account and just press the buy button. And it's like this, it's literally the same as buying a stock. Okay. But it is a CFD, just to give you there. But if you're using X1, it's the very same as buying a stock. Now the Dow The Dow has come back to this level here, but for me, I would like for it to come back to this lower level. That would be the area here. But there is still a trade on the Dow as well. But I would want to wait and see if this bar finishes. Again, I want to see if this bar finishes. So it's not something I am looking to jump in. I am sitting waiting on these and waiting for them to turn around, because the problem is that we're trying to catch a falling knife at the minute. And it's probably easier, let this falling knife drop and then start trading stocks. Okay, remember, this is a CFD. It's probably easier to wait for this to drop, hit these levels, and then start buying stocks rather than buying the likes of this. Whereas if we look at Apple at the minute, chart, we can see Apple here now is coming back down into this level that I have marked earlier on. Now, if it comes back into this level and hits the 37, the 137, does that look like a decent area to buy again? Absolutely. Absolutely. So instead of jumping in on the likes of the Dow or the S&P or the Nasdaq, it probably is a much better idea jumping in on the likes of these stocks once it gets to here. Now, if you're taking a CFD, leave a little bit at the bottom, leave a little bit extra at the bottom, and then potentially let it run. But the idea of buying the underlying asset is it's a great idea to buy some more of it. And if it comes back down to that area, I will. Look, I bought some here last year. I was 16% up on it. This will probably get back to about zero. This will probably get back to about zero before the market turns. And then if it gets back there again, I'll buy another lump of it. So I'm dollar cost averaging in, but at decent areas, at different areas throughout the year. If we look at the likes of Netflix, because that's one of the big ones as well. Netflix hasn't come down as hard as the likes of the Nasdaq, but again, look at that level. It's a really nice area, isn't it? Really nice level. Is that good enough to actually buy the underlying asset now? Or would you like it to come down a little further? Are you tempted to take a CFD there? Well, for me, it all depends on today's bar. Let's see what happens next. Google has had a phenomenal run this year. It is now broken that trend line. Well, has it? And this is the problem with trading. It's so subjective. Look, I'm making that now fit this trend line. So 1, 2, 3, 4 touches. Okay, and it's the problem with some trading. Sometimes it's so subjective. I can sort of make rules to fit what the narrative that I want. But the idea is trying to take out the narrative and trying to get things correct. So we have a level there. I'm going to make that a little fatter. Horizontal. I didn't friggin' make it fatter, did I? Horizontal. There. Okay, so bounce once, twice. For me, Google is a potential buy if it hits this level here. Now the question is, would you buy this as a CFD if it come down here, or would you buy that as the underlying asset? So if I saw this come back down to Doodle here, this is a funny little tool. Okay. Doodle. And I'm going to change that to green. And we have a green little bar at the top here. Would you be looking to buy that if you had that bar in 2 days' time? So we had a little selling day today, a little inside bar, and then tomorrow we had that bar right there. Would you be looking to trade that? Most people have said yes. Entry above that bar. Stop loss would have to go. So see my stop loss, it'd have to go below this low. See that one? So there, have to be below this low. So I'll bring this down a fraction more to there. Make sure you give a little bit, because remember, this is trending nicely. And if this runs, there's loads of upside on it. Now, whether you buy that as a CFD or whether you look at this and go, well, It's now come back 10%. For me, there's now a nice time to actually buy the stock. And that's the difference, whether you're trading a CFD, whether you're trading the underlying asset, it's something that you have to sort of work out. And at the moment, we are having a little bit of a sale. Now, it's not unlike a shop. We can walk into the shop and they tell us exactly how much of a sale is going on. We have to wait and see and try time it exactly. So there's the high. And if it comes back down to that level, that would be a 8% drop. It would be 8% sell-off, which is pretty good. But do you understand the difference between an actual phase 2 and an actual market crash? Can everyone tell the difference? This is a phase 2, okay? This here is a market crash. Look at the difference. Measure from there to there. That was a 34% drop. That's a market crash or correction. I don't like the word crash. It's just because people get scared. This is where you should be buying the shit up. This is where it was an opportunity to go shopping. Okay. At the moment, it's giving us a small opportunity. Now, the idea is if you buy the underlying asset here and then it drops down to here, what do we do now? We buy some more. If it then comes down to here, we buy some more. Okay, but the idea is we should be buying 1% of our account. We shouldn't be just loading up here because at the end of the day, we're never certain that this is going to be the point that it's going to turn. But once it starts turning, then we can start scaling into our position. Then we can start trading the smaller time frames and actually jump in and make some serious money as it's running, as it's going. Does that make sense? Has anyone got any questions on the likes of that? And remember, everything I'm showing you here is pretty straightforward, isn't it? It's pretty straightforward. All we have to do is make sure we can press the trigger. We have jumped in on board. We have the knowledge to actually execute what we're trying to do here. If you look at the likes of Garmin, it's one I've been waiting for a pullback on. Look at that bad boy. Come back to that level. And remember, your analysis changes very, very quickly. So there. Is Garmin a good place to buy right now? Look at the trend on it. Is Crocs a good one to buy right now? These should all be on these all should be on your radar. Every single one of these. We should be on our radar, rubbing our hands together, going, please come on down further. Please come down further. Please, please, please. Why? Because I want to jump in on you. I know that sounds really, really bad. EW is another one. We talked about potentially taking that trade there and we didn't get triggered in. Perfect. Let it come back down. So there seems to be the area again. Horizontal. Bounce, bounce. Is there a trade there? But again, it all depends on you. Do you think the market is about to turn? Do you think that is the area that this is turning? If it is, then these are really, really good setups. If you believe the Nasdaq or the S&P and the Dow is going to drop to the lower levels, you hold fire on these. You do not trade them. Or if you are taking these, you take them as the underlying assets. So remember, when you're trading the likes of these, make sure you're looking at the likes of the indices. So again, to reiterate, so just say we're looking to trade this here. Just say you're looking to trade this here and you don't know what exchange this is on. If you press the back button here and go back to the page, it will tell you this is priced by the Nasdaq. So this is on the Nasdaq exchange. So then we go to the Nas. Go to chart. So just to reiterate, If you think that this is going to come back to this level, you do not buy EW now as a CFD. If you think that this is the moment that this is now going to turn, then you can potentially take the likes of EW as a CFD, the likes of Google as a CFD, the likes of Apple, the likes of Facebook. Someone said Facebook, the likes of all those as a CFD. If you think the market is ready to turn, if you think it's going to continue dropping, then you stay away. Okay. So we've broken that trend line there. But we have a triple bottom here. This looks very similar to the Nasdaq, doesn't it? Very similar. 1, 2, 3. Very similar to the Nasdaq. If you think this is now going to go up, is there a trade here on this? Channel entry there. Stop loss here. But remember, the stop loss has to go below this low. So there. If you're buying the underlying asset because you're not sure, then it really makes no difference. You can literally buy it today. And if it drops down, you buy a little bit more tomorrow or the next day or when the Nasdaq hits those levels. Remember, it's about those key areas, those key levels. Has anyone got any questions on anything we've covered today? Anyone got any questions or want me to reiterate or go over it? Because we are at a really, really, really nice time to be trading, because it's given us such an opportunity at the moment to jump in. Once you hear the likes of Bloomberg talking about a crash and stuff like that there, it's like Warren Buffett said, when people are fearful, be greedy. And when people are being greedy, be fearful. And at the minute, people are now talking about doomsday, talking about stuff like this, where it means then that traders generally don't jump in till it makes a higher high. Whereas if we're buying the underlying assets, we can buy here. If it drops down to this level here again, we'll just buy some more of it. The market is overextended, absolutely. But if we look at the Nasdaq, the S&P, it's been overextended since the day it opened. Since the day it opened, the Nasdaq has gone up since the day it opened. So where is your benchmark for that it's overrated or overextended? Today, yesterday, a week ago, a month ago, a year ago, last year, 2 years ago, 5 years, 10 years ago, 20 years ago. From any benchmark you've ever gone back in time, it's always overextended. Every one of them. Oh, literally a very same story with crypto. Very same story with crypto. It's again, we're in a market where we are potentially looking to start buying up again. Now, I don't know whether you guys remember the what they call it, the friggin' webinar I had done. I talked about coming back to 42,500, and I said if it comes back there, we may get the way come down to 40K, and that's look exactly what happened. And now we've had a rejection on this. Do I expect? Okay, so I'll go do a little poll. Okay, we're going to answer A or B. Okay, which of these points do you think is most likely to hit? 64K is A, 30,000 is B. Which of these is most likely to hit? 64K or the 30K, A or B? Okay, so we've had 4 people say A so far. So the majority of people are expecting it to hit the 30K mark. And for me, again, I expected, looking at the structure here of the market, it has had this phase one. It's had this really nice phase one, and now it's having a pullback. But I would more than likely expect it to come back to here. I don't see any reason for it to go up to 64K now, unless something comes out. Unless something dramatically comes out, I can't see it going straight up there. For me, this reminds me an awful lot of what happens here. See this? It reminds me an awful lot of what happens here. We had this, and then we had this bullish run here, this nice bullish run, and then we had this fall. Now, I don't expect it to fall like this. I don't expect it to fall like this. I would expect it to come back down to this level here. So the 30K mark, something similar to this one. So if we look back here, and we're seeing a very similar, there's the high, let's pull back. We had this bull run and then come back into this area. Now, I could be wrong. I had a chat with a trader, and she's a very, very good trader. And we talked about the market. I think it was here. And she asked me, do you think it will go up, or do you think it'll go down? And I said, look, Alex, I expected to come back and at least hit the 42,500 mark. And she was like, oh no, I expected to go up. And she rang me then 2 days later. She goes, ha, Henry, I was right. Well, she's not right anymore. And my opinion is for it to potentially come back down around this area. It may not quite come down, but I actually expect it to come back down and touch this level here. And then that will be the next buying zone. But again, it comes down to what's your goal with this trading. Are you looking to jump in and jump out of the market very quickly? Well, if you think it's going to have a little run even up to here, you buy it at this level. If you think it's going to drop down, you wait and potentially have another order at this level here at the 30,000, what is it, 30,800 or 31K. Have another order there. So if it drops down to this point, you get triggered in. The same with ADA, the same with Cardano, Ethereum, Tron, any of those that have been running nicely, I expect them to come back down into our buying levels again. Matter is whether you took profit at the top. If you did, brilliant, and let it drop down again. But anyone here who likes what they have seen and wants to jump in on board, I am doing a trading day on the 1st of October in London. Okay, so anyone who wants to jump in on this, you are more than welcome. Okay, so this is my email address. So contact at henry-ward.co.uk. This here is the trading day, okay? And I actually spelled contact wrong. Good man, Henry. There we are. That's the right one. So there it is. So contact at henry-ward.co.uk. So I am doing a trading day on the 1st of October. Now, just before everyone starts, oh, Henry, can you? This is a beginner's course. So this is to cover the likes of the market structure, go over the course that anyone has done, stuff like that. This is for anyone who's done the boot camp. It's probably a little bit basic for you, but if you want to come and actually sit it, you are more than welcome. Okay, but anyone who is at the beginner stage, this is an absolute must-have. Now, one of the things with this is it's absolutely free. Okay, this is a free trading day, but there is a stipulation. Anyone who wants to jump in on this, you have to have a Naga trading account, which is funded. So Naga, these guys are actually funding the day for us. Okay, so these guys are the guys I've been trading with for the last 5 or 6 years. So these guys are funding it for us. So if anyone wants to jump in on board, that's the only stipulation, is have a live trading account, but you're more than welcome to come in if you want. All you have to do is give me a shout. Okay. And let me know via Discord, via email, via text message, whatever way you want. And then also the boot camp. Anyone who has emailed me in the boot camp and hasn't heard from me over the last day or two and wants to jump in the boot camp and you haven't heard from me, I've missed you. So please email me again if that is the story. So here is the Naga link. So there's the link for Naga. So anyone who wants to jump in on board, literally it is follow that link, sign up and put some money in your trading account, and it's absolutely there for you. There's food supplied for the day, teas, coffees. All you need is your laptop. I will be taking trades on the day. but it will be designed around education. So the way the day is broken down, it starts at 9 o'clock and it finishes at 4. And then from 4 o'clock on, I will be going to the pub and I will be having a few drinks. So if anyone wants to jump in and have a few drinks with me, just give me a shout. You are more than welcome. And we'll have a chat on the day and see what we can do. Looks like you've been watching Bitcoin hit the 64K when the picture was done. Well, if you look at that picture on the left, look at the microphone. It's not even plugged in. Talk about being staged. That was taken in the height of lockdown. But look, everyone, it's been an absolute pleasure. Yeah, wireless. Yeah, it's one of those Bluetooth ones. It's been an absolute pleasure, everyone. If you're interested, let me know, whether it's on Discord, whether it's via email, whether it's via text message. Let me know if you're interested in either the bootcamp or the trading day. There are 30 spaces. There are only about 10 left. So make sure and you let me know ASAP. And if you can't make it, also please let me know. If you're on the list for it and you can't make it, please let me know as well. Okay. Thanks, everyone. Have a lovely day. And anyone who is watching this on YouTube, make sure you click like, follow, and I will see you all next week. Thank you very much, everyone. Have a lovely evening. Bye-bye.